going back to the output gap, you mentioned that the output gap will be closing during the forecast horizon and even resource utilization above normal. What about the labor market gap? The unemployment level seems still to remain relatively high, but on the other hand, you said that you see some signs of the labor shortage in some sectors. How do you view the NAIRO, the natural unemployment level? Is it higher compared with your expectation in short term, or what's your view about the labor market gap going forward?
Well, we don't have a firm view on NAIRO because there are so many different NAIROs, and if you think about the economy as a kind of a general equilibrium system, then NAIRO changes also over time, and that's one of the difficult issues too, since it moves sort of with the rest of the variables moving in the economy, and that of course adds to the difficulties here when it comes to passing judgment on this, because it would be an awful lot easier if you just could say that, okay, empirically we figure out what NAIRO is, and then we'll sort of see what we can do to help the economy along to get there. Kind of a general reflection is that, and part of it has already started, and you find it in a few sentences in our report, is that the more unemployment falls and the more various activities in the economy continue to pick up, the more we're likely to move into a very traditional debate in the Swedish economy about how the labor market works, if there are shortages, and how people move between various sectors in the economy. But to take the discussion from kind of that level to pinning down a specific number, saying that's the key number and everything hinges on that, I'm not ready to do that.
I think you described it quite well yourself. I mean, what you want to do is, I mean, you might, of course, look at unemployment as one indicator. Our forecast suggests that it will reach some sort of average that it has been at, say, over the last 10 years or so. But then you want to look at labor shortage figures, you want to look at wage figures, stuff like that, that complements sort of this view, and it's not an easy issue. I mean,
how worried are you about the developments in Europe and the effects it might have on growth? And if they don't follow the policies they're following now, on the effects on the banking system in Europe and the spillover effects for Sweden? Is that something you look at?
Yeah, I mean, we follow what is going on, but in terms of Swedish banks' exposure to the countries that I mentioned earlier, that exposure is, as far as we can judge, very manageable. And that means that for things to really affect us, then we're talking about kind of secondary effects coming sort of towards us via other countries. But our main scenario kind of is saying that they'll muddle through. It will take a number of years to get there, and you'll, as always, when it comes to these events, have ups and downs in the course of sort of struggling with this. But eventually, the work will be done in such a way that growth picks up in Europe as well. But it will take a few years.
Yeah, because they're choosing a way to handle this, which is quite different than the Swedish solution of the banking system.
Yes, in this sense.
It's a more muddled truth.
There are many different views on. Let me put it like this: the technology how to do these things is well known. Whether one really decides to apply it or not, that differs from country to country. That means that the speed with which you sort of work yourself out of it also differs. But in general, I think Reinhardt and Rogoff, in their book, This Time It's Different, they have a point when they say that it seems to take 3 to 5 years if you have a problem in the banking sector. And given that they look at this starting in the Middle Ages and look at many different episodes and many different countries, when these things happen, just the time it seems to take to do the work, and it appears to be very hard to change that. Now, one would hope, though, that given that this started in 2007, 3 years have already passed. But there's more work to be done, at least in a few places in Europe.
Okay. Oh, yeah, sure.
Finally, a question about the risk scenarios. I mean, given that, at least as I understand it, there's it's a pretty strong macro scenario that you have. How do you view the risk scenarios here? Should we understand the main scenario here as mean distributed, basically, so that there are equal probabilities here for an upside and downside around this scenario?
Right, but the upside scenarios that you have to come up with when you start thinking about upside scenarios and the downside ones are, of course, very, very different. Because on the downside, I do think that what we wrote about in the monetary policy report still sort of roughly reflects where we are when it comes to scenarios, because you can sort of think on various kind of, let me call them domestic scenarios, when it comes to the pace at which things are moving in the Swedish economy. And then you can sort of reflect on all kinds of scenarios when it comes to what's going on in various parts of the world, dealing with the debt problems in Europe, what's happening in the US, global imbalances, what possibly or potentially could happen when it comes to exchange rate moving in various directions. But broadly, if you're sort of thinking about it in terms of a fan chart and what kind of events you would talk about under that kind of a distribution, they are roughly the same as in October.
Can I just add a comment?
Because I get the impression that if we compare October again to this forecast, that what you have as a main scenario now is roughly close to what you had as an upside scenario in October, or have I misunderstood that?
It might be. I'm going to look at the number if that's. But those generating mechanisms were completely different in the side scenario anyway. But we got a couple of times this comment now about the optimistic main scenario. That may be so. I don't know, but I just want to emphasize that the growth forecast that we have assumed for the fourth quarter, for example, is basically what you get, in line with indicators. So it's not a fantastic growth rate. On the other hand, the growth rate we had during the third quarter is much, much stronger. I mean, you may create, with some special techniques, you may create something that is in line with the indicators. But normally, if you look at the quarterly growth rate, that's far higher than the indicators would suggest. But what we now have is something in line with indicators. And if you just fix the level then for 2011, you get something like a growth rate of 2.3%. So there's a lot of strength, so to say, a growth strength coming just from the very high finishing off of this year now. So, I mean, 4.4 for 2011 looks like a very strong number, and it is in some sense, but you want to think about some kind of what happens then beyond 2012, 2013. If you don't want to get this jump dynamic back and forth, then it's sort of very difficult to see that we wouldn't get a very strong 2011 at the moment. But we might be wrong, of course. New shocks may come, who knows.
Okay, if there aren't any more questions, thank you all. Oh, sure, go ahead.
The sound quality is so poor that I wasn't sure whether somebody else was speaking or not. So, but if I could just enter with the last few questions. The first one is really also a little bit about the consistencies of the forecast, in the sense that you revised up your growth forecast quite a lot over the forecasting horizon, but you don't really have changed your assessment on the resource utilization. And I was wondering whether you could shed a little bit more light on that, because, I think no matter what the output gap was before the forecast revision, it's probably about 1.3 percentage points smaller after the forecast revision. And secondly, I was wondering whether you could explain a little bit in what extent the recent weakness renewed weakness in the krona that we had seen has sort of affected the outlook. And then last but not least, whether you could comment a little bit about the one-off upside factors to your inflation forecast, which obviously also meant that you have taken those up a bit, and whether you see risks that there could be further ones, like, for instance, clothing prices, which we start to surprise on the upside in other parts of the world. And we see here in the UK that the Bank of England is being faced with one upward surprise in inflation after the other. And I was wondering whether you sort of think that something similar could be in the making in Sweden as well.
Okay, so let me try to comment a bit on this issue of resource utilization. I mean, we do say, I'm pretty sure in the report, that our overall judgment is that resource utilization is a bit higher now. We keep the same sort of language, saying that it will, output gaps will sort of close within the forecasting period. But we also have added now that it might be a bit above normal towards the end of the forecasting period. But we, as always, we are careful not to phrase this in terms of any specific measure. I would say that there are two factors that have been sort of key or important this time. One, of course, is a new growth figure for the third quarter, extremely strong and speaking in one direction clearly. But then there has been sort of a revision of hours worked by Statistics Sweden, which we have some problems in, or we haven't fully penetrated yet what that means. So we want to be a bit careful about that, but that does have important effects on hours worked and also on output gaps if you do that in a consistent way. But nevertheless, I mean, the overall judgment is that resource utilization is a bit higher and that we might be a bit above normal towards the end of the forecasting period.
On the exchange rate, I mean, as I said earlier, it's a very sort of traditional exchange rate projection that we do, and as always, and this happens also this time, the exchange rate has moved around a bit. But nothing that kind of really has sort of changed our view of the world, the way we do the forecast, and how we look at what will happen in the Swedish economy, and eventually what will happen to the exchange rate. And then finally, when it comes to one-off events that might push up inflation, this is the best our judgment presently. And then, of course, all sorts of things can, as always, happen in the economy that can push either inflation up or down. What we can do, as always, is to watch what's going on and also carefully follow inflation expectations and see what happens on that side. This time, which is not the first time in this part of the world, the electricity prices have sort of surprised us. And what can you do when the weather is cold? And that we just have to that random element we just have to live with. Okay, if there aren't any more questions, thank you all for coming, and also those who have been listening in, thank you wherever you happen to be. The same to those of you who have been watching, and also Merry Christmas and a Happy New Year to all of you. Thanks a lot.